Market View on Money FM 89.3.
Well, folks, here we are again. Markets seem to be breathing a sigh of relief after news broken by Bloomberg that both the U.S. and China are still inching towards a possible Phase 1 trade deal, despite the rising rhetoric on issues from ranging from trade disputes to also political issues in various regions of the mainland. To take stock of all of these developments, we are joined once again by Mr. Peter Chun of Silverbear Capital out in Hong Kong. He's the founder of Silverbear Capital, and he's here to talk to us about how to manage these dizzying and vastly changing developments with regards to this front and what it means for markets moving forward. Peter, thanks for joining us, and I just want to jump straight into it, right? Markets seem to have shuddered earlier this week when President Trump said he'd rather do a deal with China after the 2020 election. But now you have those reports that both sides might do the Phase 1 deal before December 15. So, we've been here before. We've seen the sentiment change so rapidly. Really, what are we to believe, especially when it comes to setting our strategies for investment moving forward, especially given all these changing rhetorics and changing sentiment that changes so fast?
Well, I believed that the Phase 1 deal is a very probable one at the moment. I think they're being fair about each other, saying that, you can't agree everything today, but there is some things that is negotiable and is agreeable to an extent. Not because people are trying to leverage their own intention, on either side, but I think there is a immediate need, economy-wise, to adjust some of their aggressiveness on the talk.
Okay, but again, two extremes really when you look at it. If a trade deal does happen, markets will get the green light, as many are expecting. But if we start to see it actually delayed to 2020, and also if tariffs come online on December 15 and no deal until the end of 2020, well, markets might also decline. So as an investment, as a fund manager, how do you prepare for both these extremes? Or is the adage really just to stay out until we actually get a firmer idea as to which one will happen over the next 2 weeks?
Well, we try to avoid a lot of the investments into companies with a need based on export and import during these times. But however, we have still put faith in a lot of consumer goods products inside China at the moment, just because of the large population asset that China processed. Now, with regards to a lot of other investments that has something to do with this, but yet we are still having faith on is companies who are actually making a progressive relocations with their factories actually outside China, who has particularly in regions that has like a free trade agreement with the U.S., so which is actually not being affected by this talk at all. So we have positioned ourselves a little bit just to not take the heat or direct hit from the talk at the moment.
So in some ways, these particular positions that you talked about, do you think that they're pretty much immune to either scenario with regards to U.S.-China trade developments?
Yeah, it is. I mean, after all, is Party A and Party B, and Party A and Party B has no intention to disturb Party C at the moment. So we definitely had put a lot of motion into emerging market companies. Not emerging market companies, but companies in the emerging market producing products and goods right now, exported to U.S., enjoying the free trade agreement so far. Whether they're Chinese-owned or non-Chinese-owned, these companies are actually enjoying this opportunity.
Okay, we're still speaking to Mr. Peter Chun. He's the founder of Silverbear Capital to talk about the recent developments with regards to markets in Greater China. Peter, I want to shift to your home market there in Hong Kong. Hong Kong markets were close to declining below that 26,000 level recently. Today, we're seeing a bit of that bounce back. And what is your latest assessment actually for markets in Hong Kong? Because we did see it break through that previous 26,500 support level. Today, we're seeing signs of it recovering again, but still very tenuous at least, or very rather shaky at least with regards to Hong Kong markets. Is the sentiment starting to get better or worse out there, especially with these trade developments that we've talked about?
Well, I believe that I think one thing that everybody needs to take into account is December, which is basically the end of the year. A lot of the large institutional guys are preparing for Christmas now, so I would probably say it's going to slow down quite a bit, not just because of what is going around us about the talk and all the other negative news that we are getting on the street right now. So I think that's one thing that I think everybody should take into account. Now, I think with the situation going forward, I think the ripple effect from the talk is going to appear or surfaced into the market, and it will be seen and continue to be seen in the first quarter of next year.
And despite all of the uncertainty that's happened out in Hong Kong, the IPO pipeline actually in terms of listings has been rather healthy, especially in the last couple of weeks. As we saw Alibaba's big listing, they were the biggest equity listing year to date out in Hong Kong. Why do you think that there's been this vote of confidence for local markets despite how shaky the Hang Seng has been? Why have many still decided to go ahead with IPO raising and fundraising via IPOs, despite all of this uncertainty that's going on?
Well, first of all, I believe Alibaba is a company with significant substance. So being a strong company, I believe their pricing today is very attractive. I think this is one of the attraction to local investors into this particular stock at the moment. So whether there is a lot of good news or bad news around us economy-wise, I think a lot of the investors can see through that this particular company is going to be different and it will live through this market going forward. I think this is one of the major reasons. And again, I wanted to point out is the pricing for this recent listing is very attractive. I think it's around 2.9% to be exact.
Okay.
To the U.S. price.
Okay. And finally, Peter, I remember the last time we spoke in October, you mentioned that the unrest in Hong Kong might subside in about 6 months. I know you just invested into a restaurant out there, actually, or last we spoke when you mentioned to me. Recent developments, though, out in Hong Kong and also with regards to the Human Rights and Democracy Act that was just passed in the U.S., are you still holding on to that belief that tensions and uncertainty will start to subside in about 4 months now?
Well, yes. To be honest, I do still hold that belief. I mean, especially after the election in Hong Kong, there is some winners, some losers in the competition here. But then I'm sure, and I've been active being seen actually, not just that I'm sure that the atmosphere has definitely slowed down a little bit on the damaging side. I believe everybody still are not trying to destroy Hong Kong in any way. For a start, but then again, the issues going around town, trying to balance both ends would probably need time. But however, I think the balancing act would slow down in terms of damaging the city. They would probably, try to negotiate or mediate this in a more seasoned manner going forward.
All right, that's Peter Chun, the founder of Silverbear Capital in Hong Kong, speaking to us about his outlook on greater Chinese markets. Peter, appreciate the time and good afternoon to you.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.